Hey everybody. First of all, I always like to mention anniversaries and birthdays and things like that. I'm a sentimental soul, I suppose, and so I can't let this day go by without mentioning that today, January 26, 2023, is the 18th anniversary, I guess you would call it, of the sale of Profit.net to InvestTools, which became Ameritrade. So usually I do some kind of sentimental, reflective post. I'm just not in the mood and really don't have anything particularly sentimental to share. Obviously, I'm very glad that it happened, and some good things have happened in the 18 years since. Slope in particular has existed for that entire span, save for the first 2 months afterwards. So Slope's 18th birthday is in a couple of months from now. But anyway, happy anniversary, profit sale. That was an amazing day and a culmination of a lot of work. So as you can probably guess, it has been a long time since I felt so glum about trading in the market. And at the risk of seeming like I'm just trying to find, through tortured charts, some rationale for the market to ever fall again, I must share one thing that I stumbled upon, because what I asked myself is, what was there another period in which it seemed that the market was really reversing, and then it just seemed to stop and got robust and strong and seemed like it was going to just resume going higher? Because that's kind of how I've been feeling lately. We had our lifetime, this is the spider, obviously, we had our lifetime peak here. And then over the course of time, it was like lower low, lower high, lower low, lower high, lower low, lower high. And so that's all well and good, nothing's broken yet. And then higher low. So, we started going down, but it literally ended in like 1, 2, 3, pretty much 4 days. In 4 trading days, the entire resumption of falling stopped. And we formed this base and then broke out, tested it, and then kept going up. And I can't emphasize enough, to me it's like bizarre. I just don't understand it. But this tiny little blip, this petite pop right here, which is dwarfed by all this other action, this teeny little thing has been devastating. And I've heard that from quite a few people in the trading world, and it's just bizarre. I suppose it's a combination of a VIX, which has got completely demolished. We've got a VIX like at 18 again. Plus maybe getting too aggressive. I don't know. I haven't been particularly aggressive, to be honest, but it's just baffling to me that this little portion here has actually been far worse than this 2-month slog right here, which is, dramatically bigger in terms of both time and enormously, like by multiples of price. So I don't get it. It's scary to me that this little blip can cause so much damage. I've obviously gotten sidetracked with my with my little speech here, but let me get back to the topic at hand, which is, has there been a period like this when it just seemed that the big bad fall was over and we were approaching just another bullish breakout again? And there was, and it was back here, specifically around about March 2002. And from this distance, you can see the similarities. You had, first of all, you had a huge, almost uninterrupted run up, which is what we see here. You had a beautiful top form, which we've seen in both cases. And then, and I'll just zoom in on this portion here, you start to, let's do this more accurately. You do the old whole series of lower low, lower high, again and again and again. And there's big old lower low. And this was, very climactic in the actually with the terrorist attack. This is the whole 9/11 bottom, and then it went higher, and then we have our much higher low here, and then it pushes up, and it looks like there's some real strength building there. And I haven't drawn it here, but in your mind's eye, you can see without me drawing it that a trend line like so would be broken to the upside. I mean, I can just see this in my head, but a trend line drawn amongst those lines would have been broken quite cleanly to the upside. So if we beamed ourselves back to March 2002, and I, without even looking, I can tell you that analysts were, I'm sure, crazy bullish around here, just jumping up and down bullish. And why not? The worst thing in the whole world had happened to the United States down here. The whole world was on our side. We had, obviously, it was sort of a dreadful cleansing event, if you will, for the financial markets. And it looked like things were getting better. And I don't have to tell you that things resumed their badness. In fact, shortly thereafter. This is around about where things seemed to be pretty rosy. And then this took place. Very dramatic. So using layered charts, we can see this more easily. And I'm doing this live, so forgive any imperfections, but I'll do my best here. So here's this chunk of time like so. Back in 2001, 2002. And here is this chunk of time. And let's stretch this a bit. This is the high risk portion of this exercise. And it puts us something like so. Now, one thing about layered charts is that the entire chart stretches and compresses, together. And there are instances where it'd be nice to like squish this a little more and stretch this a little more, almost like the old silly putty, because it's not going to exactly line up analogously. But I hope you can see, and I'll change the colors to make this a little more obvious. Let's change the chart type to a line, and let's change it to red, just to kind of make it simpler. Change this to a line like so. And so in this instance, you can follow along with me that we have our peaks up here and just kind of follow the blue and the red together. So we've got down and then up and then down and then up. And this is where they don't quite correspond. Here's the red peak here and here's the blue peak here. Then down together, down we go. And then up and then down, but not quite as much. And then up again. So you can kind of see, and this doesn't have to match as nicely, but you can see just the broad overall ascent going on here very smartly together. So again, here we go, down, up, down, up, down, up, down, but not to a new low, and then up again. So that puts us round about here. Now I know some people despise analogs. I don't, I'm quite fond of them. Sometimes they work, sometimes they don't. But weirdly, ironically, paradoxically, the only guy that can save the Bears at this point is Jerome Powell. Save for Apple and Amazon having catastrophic earnings or nuclear war breaking out. Jerome Powell on Wednesday is weirdly the Bears' best hope of him saying in some form or fashion, again, guys, I really, really meant it. We're serious about this and we're not pussyfooting around and just, this is ridiculous. The thing to watch is, do we push above this trend line, this dashed line, and this is when I hang it all up completely, this Fibonacci right there. We're below all of those right now. So there's still a little hope, faint as it may be. But I did, I was interested enough in that analog that I wanted to show you, and it's subtle enough that I really felt a video would be the best way to show it as opposed to just a static picture. So that's it. Good luck. Hope you're doing okay or even well, and I'll see you around.